So you're not going to believe this, but FTX is about to reopen its trading business. The insolvent cryptocurrency exchange has a new CEO, John J. Ray III, which, let's be honest, sounds like some Marvel spin-off. But according to a report from the BBC, and no, not that type of BBC, you dirty-minded folk, John Ray III has came out and said that the company may recommence its trading operations. Restarting FTX.com was one of the ideas brought forward by the task force that Ray himself has established. A task force whose sole job is to put together possibilities that might actually recover investor funds. Now, I want to be clear here, make no mistake. This does not mean FTX is definitely back and it's going to go and dominate the crypto space as it did before. But it does sort of warrant a kind of hope for investors that might still be trapped in FTX. According to a report in the Wall Street Journal, Ray said on Thursday that he is still attempting to locate and reclaim FTX assets. Ray said that everything is on the table, and if there is a way forward on that, we'll not only find it, we will actually do it. Of course, in reference to reopening the exchange. Ray also added that there are stakeholders we are working with who've already identified what they see as a viable business. Now, John Ray has brought up an important idea here, a decent debate in itself, which is whether or not restarting FTX.com as a business would actually recover more funds in the long run for investors rather than the usual method in bankruptcy of just liquidating everything and distributing what's left. Not very long ago, FTX was worth more than $32 billion at its highest valuation point, of course. But then the crypto winter set in full force. The Federal Reserve started hiking rates and began to cause damage to pretty much every asset class, including cryptocurrency. Many crypto firms in the last year or so have all disintegrated, and FTX is one of the most popular ones, given it was the second largest at one point. But FTX, after helping many other crypto companies weather this damage, weather this crypto winter, and the aftermath of, well, the utter show that is the world economy right now, FTX and Sam Bankman-Fried themselves found themselves in the soup that was brothing in this absolute disaster in the crypto market. It prompted Sam Bankman-Fried to actually go to his biggest rival, Binance, to seek some form of assistance to bail them out. Binance at first said that, yeah, we'll help you out. We're actually interested in buying you out. And it gave the impression that it was eager to assist.
That was a lie.
But Binance quickly distanced themselves from FTX as it became apparent from very basic and quick investigations that FTX was an outright sham. And that's basically what led us to where we are. It came out that SBF's trading business Alameda Research was using FTT, a token which was created by FTX itself as collateral for its trading, which in essence was tapping into deposits made by people using the FTX platform. Which of course sounds like a scam, and well, that's because it is. But FTT could be exploited in this way because its issuer was FTX. Despite all of this, SBF and senior executives in the company went to great lengths to prevent FTX's books from reflecting any of Alameda's liabilities, which ultimately means they were hiding under the rug what was actually happening. Ray, who was ultimately appointed the CEO of FTX after it filed for Chapter 11 bankruptcy, had previously stated that in his 4 decades of high-profile liquidation cases, he had never seen such complete failure of corporate controls. And this is very ironic given Ray actually was in charge of Enron. I mean, what does that say? That this is a bigger scam than Enron? Now, there's a big misconception with what bankruptcy and filing for bankruptcy actually means. It doesn't mean the company is definitely going to go bust, but in most cases that is what happens. A company files for bankruptcy, they reorganize their assets and simply pay out investors on a sale. But if there is an opportunity for a company to reorganize and redistribute assets and get business back working, then investors might actually vote for this option. And I think FTX itself has a good argument to go this route. A filing for bankruptcy simply explores all of the available choices in order to maximize the recovery for its creditors and investors. Now, while FTX has its own drama, so does Sam Bankman-Fried, who was dismissed as CEO of FTX when they filed for bankruptcy back in November. He claims that FTX's US platform was completely viable and that the company's filing for bankruptcy may have been averted. In December, SBF was accused of engaging in fraudulent activity and eventually later arrested. He since pleaded not guilty and awaits his trial to begin and getting full full floor. And as that happens, we will, of course, learn more about what's going to happen to him. Is he going to spend his life in jail? Reality is probably not. And how has the overall crypto market reacted to this news? Well, it hasn't overly been great. Surprise! The first round of inquiries into FTX's collapse found that their assets, to be the value of $8 billion were actually misappropriated. The company's counsel testified about a week or so ago that the company had recouped assets worth up to $5 billion. Of course, there's a bit of a discrepancy there. Because it is impossible to foresee the exact magnitude of losses that investors are actually going to suffer, the cryptocurrency exchange could temporarily reopen so that customers who want to withdraw at a massive loss are actually allowed to. However, according to opinions of many industry experts and cited by Bloomberg, permitting a restart of operations would result in a massive backlash and a massive big collapse as people run for the door. But the crypto markets have responded favorably in the potential that FTX will indeed reopen and restart its operations. Despite the fact that the current price of FTT is around about $2, it is still a far long cry from its highest ever value of $84. The ultimate announcement of the potential rebirth of FTX will offer investors of companies like Genesis, which also recently just filed for Chapter 11 bankruptcy, it will offer a form of respite and potential optimism that maybe this isn't the actual end of any exchange in itself. Now, FTX stands for Futures Trading Exchange, and according to statistics provided by CoinGecko, the price of FTT has increased a whopping 165% from its all-time low of 82 cents in December. Now, the reason most cryptocurrency exchanges like Binance has their BNB token and FTX had their FTT token was actually it's a way of them sort of generating a currency from thin air to offer to its users and also to acquire new businesses. For example, FTX actually bought some businesses and other assets using its FTT token, which ultimately it created itself. Kind of mad if you think about it. Although it is unknown why traders continue to purchase and sell tokens of a dead exchange, a currency that seemingly has no future, it is plausible that traders sense there might be some opportunity to benefit at least from the tremendous volatility within this token in a short period of time. The greater fool theory is still in mass effect in the market. And maybe without a pirate, an absolute scam artist at the helm, maybe John Ray can actually salvage the sinking ship and potentially recover a lost treasure that people weren't even looking at. I think it's also possible and outright plausible that investors into this firm, big investors, maybe the likes of Kevin O'Leary, for example, might actually start looking at this business thinking, let's take it over. After all, FTX is a well-known brand, albeit for the wrong reasons right now, but its trading product was actually liked. People loved the platform, and the reviews before this scandal spoke for themselves. People loved this trading platform. It was viable once upon a time. And if Nike can recover from sweatshops in China, banks can recover from absolute fraud, and oil companies can recover from putting oil on seagulls and seals, then maybe FTX does have a chance. I mean, it's going to take years to gather the trust it once had. But if the last few years have taught me anything about the current market, if you put a popular guy at the helm, a person who people admire and trust, it doesn't matter about the fundamentals of a business. It doesn't matter if the ship is sinking. All it means is people will buy into the business model and continue to operate it. I mean, for God's sake, people loved a company called 𝐎𝐿𝐴, which basically pushed a truck down a hill and bought into it because of Trevor Milton, the CEO. They thought he was trustworthy. Now, FTX could do the same again, or they could install a legitimate CEO and potentially have a future. What do you think? Are you betting on FTX's recovery? I'll tell you one thing, I'm not.